You've reached the stars. Now let's see you conquer galaxy.
Good morning, everyone. Good morning, ladies and gentlemen. I want to specially welcome us today to this wonderful event, this special webinar series. I believe we are all keeping safe and we are all fine. You know, we are in very interesting times. And one of the good things that Meristem would always do, if you have always followed us, is that we always try as much as possible in line with our brand promise to provide that timely information, get our clients updated with the latest market information that we can always use to produce or derive value. So I want to welcome every one of us today, mostly those who this may be their first time of attending Meristem webinar. And I can assure you that it's going to be a great time for us today. So once again, I welcome you. My name is George Anebunem, and I work here in Meristem. And this morning, I have some special people that are also part of this webinar. Coordinating this webinar or moderating this webinar with me this morning is Morayo Jayeola. Morayo is an investment advisor with Meristem Stockbrokers Limited. Morayo, would you want to say hello to participants?
Good morning, everyone, and thanks for joining us on this conversation.
Okay, thank you so much, Morayo. You are looking so good this morning. Thank you. So we also introduce our panelists this morning. And our panelists this morning, we have Eniola Olabode, who is a senior associate with Meristem Research. Eniola is also a chartered accountant with very rich experience in equity research. And she has been playing in the investment space for a long time. And I believe Eniola has a lot to share with us this morning as regards margin lending. I would also like to introduce Abisoye Oludipe. Abisoye is also an investment professional. She's a portfolio manager with Meristem Wealth. And Abisoye has rich experience when it comes to stockbroking, mostly from the retail side. And I believe that everyone here today, we are all equipped and ready to share so much with our clients. And I believe that by the time we are leaving here today, we would all be so much decorated with enough information and knowledge to go out there and create wealth for ourselves. So like you all know, today we'll be talking about margin lending. And why is it so necessary that we talk about it? If you look at the market situation today, you will see that inflation rate has gone up, or is still up there by 18.12%. You can see a lot of volatility in the market. So we saw that there's need for people to know how and where they can derive or create value for themselves. Not just creating value, but innovative, strategic approach towards doing that. And that is the reason why we have put together this special webinar series. And we believe that by the time we are done, every one of us here would have been so happy to go out there and do so much with the knowledge we've had. You don't need to patronize Ponzi schemes. You look for the likes of Brisk Capital. I believe that with this knowledge we are going to share today, you will be rightly equipped to creating greater values for yourself. So moving into the next segment, I would like to hand over the floor or the microphone to Morayo Jayeola, because Morayo is set. She can't wait to take us through the first segment of this webinar. Morayo, I guess you are ever ready.
Thank you very much, George, for that very detailed introduction. And thank you once again to our attendees for making our time to join us on this conversation to hear what we have to say. There's been there are quite so many information out there about margin lending. What is margin lending? Am I borrowing the money from you to go and do something else? Can I borrow the money, use some to do something here, and then do? There's so many facts and fiction on margin lending, and that is why we've called on this conversation to distinctively explain to our investors, to our clients, to our prospects, where Meristem comes in and how we do margin lending. To start this conversation, I have here with me Abisoye Oludipe, who is our in-house margin guru, and she's going to just explain to us literally in plain English. Abisoye, what is margin lending?
Thank you very much, Mariah, and thank you everyone for joining us this morning at this webinar. Now, in literal terms, I know every time I try explaining margin lending, they tell me, bring it down and let everybody understand. So I would say that margin lending is the loan you take from your stockbroker, primarily for the purpose of trading equities, of trading shares or stocks. That's basically what margin lending is, a loan taken from your stockbroker for the sole purpose of trading in equities. Thank you.
Thank you very much. So Abisoye, I can come to Meristem as my stockbroker and say, I want to buy XYZ shares. Then Meristem provides the money, right? That sounds good. So can you expatiate more on the benefits of this margin lending to investors?
Okay, so if you're going into a venture or if you're making an investment decision, the first thing you want to do is, or the first thing you want to find out is what's the return I'm going to be getting on this investment. Now, that's one of the things that margin lending does for you. Yes, I understand that it has its risk, but then it magnifies the returns that you get, when you purchase your margin. So imagine an instance where I have only 500 Naira and I want to buy a particular stock. And imagine that particular stock, a unit is 500. And instead of me buying just one unit, I go to my stockbroker and I'm able to buy, to collect another 500 million, for example. And it means that the profit that I'll be making or the gains that I'll be making on that 1 billion that I have gotten now is going to be different from what I would have gotten if I was just using 500 million. It means that after taking the charges that is involved, I would still be making a lot of profit. And if remember, the first rule of investment is buying low and selling high, which is basically what every investor plans on doing every time you make an investment decision. So you have magnified profits. Now, it also helps you diversify your portfolio. So for example, if you have limited cash, you also want to see, you don't want to spread it too thin across different sectors or different stocks. So what you're going to be doing is buying just a few. But then what margin lending does for you is it enables you diversify your portfolio. So you're able to buy as much as you want to buy in different sectors, regardless of the amount that you have, because you've been able to take it a step further and get a margin loan from your stockbroker for the purpose of buying more equities, which means that the goal is for you to increase the returns that you're getting on that investment. Another thing again that you're going to be looking at is the ease of accessing this particular fund. So for example, if you had to take out funds from maybe a bank, just think of the documentation it would take, the due diligence they would have to do, and all of that. But in this case, your stock is already domiciled with your stockbroker. In fact, it takes it a step further. And then you can use even the shares that you have. Though a select number of shares, you're able to access this particular fund using either shares or even when you bring in funds. And in no time, in limited time, you'll be able to start trading these stocks. And remember that when it comes to stock trading, the market does not wait for you. The market does not wait for you. So what you then need to do is margin lending gives you that ease of access to funds. Thank you, Mariah.
Okay, Abisoye, thank you for that. So if I get you clearly, I'm just going to reiterate the points for the sake of our listeners. You mentioned that the key benefits of margin lending, we have the opportunity to leverage your benefits. diversification of your portfolio, and then a convenient line of credit, because supposedly you already have an account with your stockbroker, and then you're just leveraging on what you have existing to get a margin in quote, to get an extension of facility to trade with, to take position in the market. That's quite interesting. It sounds very sweet to the ear, right? But then, what are the risks attached to the margin lending?
Okay, thank you, Mariah. Remember that the very first point that I mentioned was it helps you magnify your return, which also then means that because of the volatility in the stock market, despite the fact that the goal is for you to gain when you buy a particular stock, guess what? The market can also go down south, which means that you can also lose cash. So the returns that could be magnified if things go right, or if the market, if you do your analysis properly, can also backfire, which means that you can also make more losses than you thought. So for example, you've taken a loan of maybe 10 million naira from your stockbroker for the purpose of margin lending. Guess what? The amount that you have taken is static. However, the value of the shares is not. The value of the shares that you have used these funds for is not. And then when at the end of the tenure of the agreement that you have signed with your stockbroker, you then need to refund them with the amounts that you have taken. So you need to be very, very careful when buying, when using margin to buy shares. It is very, very important that you do proper analysis when buying equities using margin lending. It magnifies your loss as well. So please be very careful. You need to make sure that your analysis is intact when using margin lending. Thank you.
Thank you very much, Abisoye. So as much as margin lending enables you to leverage your benefits, to diversify your portfolio, it has a convenience. So you're telling us that the risks involved, the volatility of the market, because it's quite outside our control. So that could pose a downside. Your profits could be eroded as well, and then it could also be amplify both the interest you're incurring, the costs on the margin as well. It just erodes your profits, so to say. Okay, that's quite interesting. But aside from you and I have been speaking this very nice English, investors are enjoying it. They're like, oh, it's something interesting. So we might want to go technical. Let's look at the market angle of this. And that is where Niola Olabode will come in, and I'll hand the microphone over to George.
Thank you so much, Mariah. Thank you, Abisoye. I think this conversation is gaining steam and is becoming more interesting. But before we go into the next segment with Eniola, I would like us to know that the question and answer room is open. So you can use that section to ask your questions, drop your questions as the conversations continue or deepen, because we know that with your questions, we are able to deepen the conversations. Thank you very much. So now I will, like Mariah said, we're going to jump into the meat of the matter now. That is the technical aspect of margin lending. So, and I believe that Eniola can't wait to do justice to it. So once again, Eniola, thank you for coming around, and I will ask, how much can I borrow?
Thank you, George.
Margin lending, yeah, thank you.
Thank you. So before I answer how much you can borrow, I think it's important to understand that not everybody is eligible for margin lending. So the first thing we do is we try to do investor profiling to know if you are eligible, if you are fit for the facility. And so this is not just to rule you out, this is just to ensure that your investment objective and your risk tolerance is a match. So we want to evaluate suitability basically, and we would not like that you do that yourself. Come to us and we evaluate suitability ourselves. So in other words, we're trying to assess your investment objectives, like I mentioned, your financial resources, your risk tolerance, amongst a host of other criteria. So before the facility is made available to you. And also, after we've assessed all of that, so it is important to know that there is a ratio called the loan to value ratio. So just like Bisoye mentioned earlier, a margin loan uses existing shares or cash or your managed funds with your brokerage account, and in this case, Meristem. So you use the margin loan uses existing shares, cash, or managed funds with us. So these existing assets are then used to calculate your loan to value ratio. The loan to value ratio is the percentage we will lend to you based on the market value of the accepted security. So for instance, the securities lending ratio, which is the loan to value ratio. For instance, if a stock has a loan to value ratio of 70%, right? So the maximum amount would allow you borrow is up to 70% of the value of your holding, that is the existing shares you're using as your collateral. So, and that is based on the condition that you would provide the remaining 30%. But this is speaking generally. So I'll allow Bisoye provide insights on how we do this here in Meristem.
Thank you very much, Eniola, for that. Okay, so at Meristem, our loan to value ratio is 50, which means that if you're going to be taking 50 million naira, for example, we can match that and give you 50 million naira. There's no maximum to the amounts that you can take using margin lending. However, there's a minimum amount of 1 million when taking margin lending. Thank you.
Okay, thank you so much. Thank you so much, Bisoye. Thank you, Eniola. Beautiful insights. And like I said earlier on, I can see that some people have started sending their questions into the question and answer chat room. So I can see a question here. Maybe I would like you to maybe say something from Mr. Tunde Oluwashola. What portion of the shares in my portfolio will a lien be placed on at CSCS? The portion borrowed or the entire portfolio, including my investment? Bisoye, would you want to take a shot at that question?
Yes, I would love to. Okay, thank you very much, Mr. Tunde, for the question. I love that question very well. Now, the thing is, it shows that you have been in the market, for a while. And with Meristem, when you're taking margin lending, let me just tell you the secret. There's no lien on the shares that you're going to be using as your collateral. Now, you can actually trade those shares, because what we don't want is when you're able to take an opportunity in the market, and then because your shares are on lien, you're unable to now, with the platform that Meristem has, you can actually trade those shares. What we just need to do is move those shares that you want to use as a collateral using a detachment form. So there's a form called the detachment form. You fill the form, states the shares that you want to move there. Now there's a select number of stocks that you can trade on margin, which I'm sure Eniola would speak to later during this conversation. Now, if any of the shares you want to use as your collateral is in that bucket of shares, you need to fill a detachment form, and then we would process the movement from your normal portfolio into the margin portfolio. We move it into a margin portfolio. And then what then happens is, if you already have a Meritrade account, with just that single login details, you can view your normal portfolio and view your margin portfolio. And then you can trade seamlessly. The same way you would trade your normal account is the same way you would trade the shares in your margin portfolio. So there's no lien on the shares that you're using as collateral or the shares you're going to be buying using the margin loan that you have taken. Thank you.
Well, thank you so much, Bisoye. Now I will have to get back to Eniola. Please, our highly esteemed participants, clients, and prospects here, I would like you to keep bringing on the questions so that we can engage properly and be able to dissect this issue or this conversation very well. So, Eniola, I would like you, Abisoye said something about risk, which means is agreed that there's risk involved in margin lending, which is the same for every other investment. So I would like you to, take us through on how we or investors can minimize the risk involved in margin lending. Thank you.
So, like I said, the first thing is on the investor's perspective, and on the investor side, we would recommend you consider leaving loans, and this is to reduce the likelihood of the margin call and perhaps the frequency of the margin call. We'll get to what the margin call means later. And another thing with commission and interest charges on the total return of your investment. So because you're buying on margin means that by implication, you have a loan to service, right? Because a margin lending is you taking a loan to buy stocks, right? So you have a loan to service. And we would typically we regularly charge and post interest costs to your accounts monthly. So we would advise that you also pay down those interest charges before they accumulate to unmanageable levels. And also, it is also important that you set a personal trigger point and keep additional financial resources in place to contribute to your margin accounts when your balance approaches the minimum margin requirement, which would also get to later. So now that I'm done with the first, that is what we recommend, ways we recommend the investors to minimize risk. I'll go to what we do, that is the plugs we've put in place to ensure that the risks are minimized. And the first thing to understand is that we have a list, like we mentioned. So, and like I mentioned earlier also, we first of all do investor profiling. After all of that has been done, then we go to the list. Not all stocks can be traded on margin. And we regularly handpick some stocks. And these stocks, we do that to ensure that whatever stocks we are recommending to clients are backed by fundamentally sound businesses. So we're not just recommending stocks, we are also recommending fundamentally justified businesses. That is, the stocks are backed by companies that have really great fundamentals. And also, and this is to ensure that the ultimate goal is to ensure that whatever return you are making on the investments, it is sufficient enough and probably even surpasses the cost you're making to service your loans. Remember, I said that you're taking a loan and then you need to service the loan. So we want to ensure that whatever return you're making, the potential return is sufficient to cover the cost of servicing the loan. So now I'll briefly walk you through how we select those, without going into much detail. But first is that we do an industry analysis. We want to evaluate what the stage the industry is in its life cycle. We want to know, is it at the growth stage or is it at the decline stage? We don't want to recommend an industry that is probably, say, at the decline stage, or an industry that is significantly threatened by technology or by competition or something where the companies there are just struggling to stay alive. So we want to ensure that we're recommending industries that are very solid and have very solid prospects. And also, when stocks that make it through the industry analysis are then we now do an individual analysis on those stocks to assess their individual fundamentals. For instance, we look into some financial line items like, say, revenue, operating profit, and bottom line, for instance. So, for instance, we want to ensure that there is consistent growth. The firm has recorded, say, consistent growth in revenue, operating profits, and bottom line for at least 3 years in the past 5 years. So we would also look at the financial ratios and then put a cap and a floor as required. So for instance, one of the screens can be that the firm's normalized return on equity cannot be less than, the firm's normalized return on equity cannot be less than 10%. So we want to ensure that every stock that makes it in that list has at least 10% normalized ROE, that is return on equity. So we would also consider liquidity, for instance. So we want to ensure that these stocks are actively traded on the exchange. There's always a bid for it. So we don't want a stock that you'll be stuck with, a stock that you would be unable to sell. So we want to ensure that every stock we recommend to you is actively traded on the exchange. And also one of the criteria is that the stock cannot have a downside potential greater than 15%. That is, our target price, we have target prices for all these stocks, and we want to ensure that the current market price is or less than 15% compared to our target price. So, for instance, if the stock is trading at 10 naira on the exchange, we want to ensure that it is not 15%. If it's trading, our target price is 10 naira rather, we want to ensure that the current market price is not 15% greater or lower than our target price for the stock. And also, we would also consider significant qualitative factors such as corporate governance. We are not going to recommend a stock that has corporate governance issues, like a company that has litigation issues or lawsuits hovering around its head. We want to ensure that these stocks are, or a company where the CFOs or the CEOs are regularly replaced. So we want to ensure that these companies we recommend, they are stable, right? We can say for a fact that they are stable, and so corporate governance wise, they are good to go. So we're not just looking at the numbers, we're also looking at qualitative factors. So not to bore you any further or go into further details, I hope that you understand how we pick these stocks, and I hope that gives you assurance that these stocks are not just picked on the surface. We do our in-depth analysis before we recommend them to you. Thank you.
Okay, thank you so much, Eniola. I would like you to quickly take on just a few questions before I ask you another, before we move to the next segment, sorry. So very interesting questions. One is from Oyekule Ajao. He's saying, in case there's a terrible bearish market for about a year after taking the loan, will Meristem give some rebates on the loan interest? That's number one. Number two is, did you say interest is paid? This from Olumide Morakeon. Did you say interest is paid monthly on the loan? What's the rate charged on the loan?
Okay, so regarding the first question, so what we have tried to do is at the initial stage when we started margin lending, it was a fixed rate that we used. However, based on market realities, based on even the interest, the fixed income market reality, so we're not just looking at just the equities market, we're trying to make sure that there's that balance between, what exactly is our, investor experience, our client experience in the market. So we currently use a floating rate, which means that should there be a need to adjust the interest rates, based on market realities, be rest assured, Mr. Oyekune, that we would look into it and, adjust rates accordingly. But currently we use a floating rate of 12% for that. Now, regarding the other question, the interest is accrued on a daily basis. However, the interest is only charged on the overdrawn amount. So for example, if you collect maybe 5 million, at the initial stage of taking a loan of 5 million, you're going to pay a management fee, which is a flat fee of 2%. And every agreement ends 31st of every year. So should you want to roll over your margin lending facility or request, you get to notify, Meristem stockbrokers for the next year. However, the 2% management fee is prorated till the end of the year, and that's a flat fee of 2%. Now, for interest rates, it's only charged on the overdrawn amount. So for example, if I take 5 million naira, I see an opportunity in the market, I take 5 million, I take 10 million, and, I'm seeing the movement in a particular stock, and I feel like, in the next 5 days, it should have gotten to my target price, because first things first, you need to be very careful when everybody is is greedy in the market. So you need to have a target for yourself. Now, what you then need to do is, okay, I think my target price is, let's say 32 naira, for example, maybe for a GT, and it's currently trading at 28 naira. And then within 5 days, I'm able to get it to sell at that 32 naira and I exit, which means that I only used the margin for maybe 5 days. The only interest you're going to be paying is for the 5 days that you have used, as against, you know, paying a static fee, which is what you would be getting from your bank. If you're going to be getting the loan from your bank, you're going to be paying a fixed rate, whether the funds have been utilized or not. But when you take margin, you're only going to be paying interest when the fund is utilized, or for the number of periods that you utilize the funds. Thank you.
Wow, it's interesting. So thank you so much. Please keep the questions coming. Keep the questions coming. Believe me, we'll answer all your questions. So at this point, I want us to move to the next segment of this discussion. And I would like to call on Morayo to take us through this next session. Hello, Morayo. Hi, Morayo. Morayo, are you there?
Can you hear me, George?
Yes, loud and clear.
Okay, thank you very much, George. So, Abisoye, I think there's a question that I'd like for you to just touch base on from the question and answer chat room. Mr. Oyekule Ajao says, in case there's a terrible bearish market for about a year, after the updates on the loan interest.
Okay, so for that question, what we do is we ensure that, you know, our interest rate is also in line with the market realities, which is why we use a floating rate as against using a fixed rate, you know, to determine our interest rate for margin. Thank you.
Okay, so it's not negotiable. So what you're trying to say, considering market realities, maybe a client's portfolio goes, is it negotiable or is it cast in stone? Hello, so can you hear me?
All right, Morayo. Like I said, we use a floating rate. So based on market realities, we adjust the rates when need be. But currently, the interest is at a rate of 12%, a floating rate of 12%.
Okay, thank you, Abisoye, for that. So I'm sure a number of attendees of this webinar, their interests are peaking. So if one wants to register for margin lending with Meristem, how do I go by? How do I go about registering margin lending with Meristem? What are the step-by-step guides, documentation, procedure? Can you just quickly put us through how that works?
All right, thank you, Maria. Okay, so if you're going to be starting margin lending with Meristem, the first things first is for you to have an account in Meristem, open an account in Meristem. Now, after opening an account in Meristem, what you then need to do is signify your interest via calls or via email that you're interested in the margin lending product. Now, once that has been done, what would then happen is there's a risk acceptance criteria where we do a profiling to be sure that you actually qualify to take margin. Not to worry, you would also see the risk acceptance criteria. They're quite straightforward, where we consider things like age, someone below 18 cannot take margin facility. We want to look at your track record to be sure that you understand the market to a certain extent. Then there's just a number of criteria. Do you have the minimum requirement? Are you going to be using equities? Are you going to be using funds? Those are the basic things that we need to check using the risk acceptance criteria. Once that has been done, you then need to sign the agreement. There's an agreement for you to sign. Now, once that has been done, and then we have determined if you're going to be using cash or equities as your initial margin or as your collateral, what then you need to do is, if you're going to be using equities, you need to fill the detachment form. Remember that I said we do not put your collateral on lien if you're using equities. Now, I think I saw a question in the question and answer room that said, why exactly do I need to fill a detachment form? Now, there's a certain, like I said, there's a basket of stocks that you can buy or using margin lending. Now, in your normal portfolio, there's no limitation to what you can buy. You can basically buy all the stock listed in the Nigerian Stock Exchange. However, if you're taking a margin loan, they're just a basket of stocks that you can buy. So what we do is you then have two portfolios. You have your normal portfolio. We're not going to say because you're taking margin, you can't trade every other stock in the market. We wouldn't do that. So you have access to that. And then you also have access to the stocks that you have bought on margin. So with one login details to your Meritrade platform, which is Meristem's online trading platform, you can then have access to both portfolios, and then you can trade either of them. So you fill a detachment form to move the select stocks from your normal portfolio into the margin portfolio to act as the collateral that you're going to be using. And then once that has been done successfully, we would grant you the margin that you're taking. So what you'll be seeing is the shares, the value of the shares, and the shares itself that you have moved in, you sit in your portfolio, and then you have the available cash that we're going to be giving you. And in the case where you're using cash, you pay in, we credit your account, and then you have the value of the amount that you have taken reflecting as your purchasing power, as well as the loan that you have taken. So for example, you've taken 10 million naira and you paid in 10 million naira and you want to take a loan of 10 million. It means that your purchasing power will be reflecting 20 million. If you maybe pay 10 million and you want a margin of maybe 7 million because you want to over collateralize based on the volatilities in the market, it means that your purchasing power would reflect 17 million. So I don't know if that is, clear. Thank you.
Thank you very much, Abisoye, for walking us through what the process and requirements will be like. But I know that some investors have asked, they hear maintenance value. What am I maintaining? Who is maintaining what? Are you maintaining my money? Am I maintaining your money? What is maintenance value? Then at what point, Abisoye, does a margin lending client get a margin call? So explain to us what maintenance value is, and then at what point are you calling me, Moriah, you have a margin call? Thank you, Abisoye.
Okay, thank you very much. I think this is one of my favorite parts to explain to people. So when you're taking a margin, for example, I know that a lot of people just think, oh my gosh, it's a lot of stress. But guess what? It's one of the risk measures that's actually put in place to also protect you as an investor. So now with Meristem, the maintenance margin is 40%. Now you're wondering, 40%, what exactly are you talking about? So now if you have a total portfolio value of 100 million, imagine what you brought in was 50 million, Meristem gave you 50 million, which makes your portfolio 100 million. Let's say that prices were static, today being the maybe last trading day at time of evaluation, mark to market at the end of the day. Now, and then tomorrow, you are wondering, okay, if I'm calculating my maintenance margin, what exactly am I going to be getting? It basically means that at every point in time, your own equity in the portfolio, which means that your own contribution into the portfolio. So remember that the portfolio, that margin portfolio is a mix of, oh, Abisoye brings this, Meristem gives me this. It then means that at every point in time, Abisoye's contribution in the portfolio must be at least 40%. If it goes below 40%, that's when, a lot of people would say the dreaded margin call, or you get a lot of things. Yes, we understand that, but it's a risk measure put in place to actually protect you as an investor. And that's, in fact, before it gets below 40%, guess what? With Meristem, we've taken it a notch further to then say, at the time when it gets to 45%, you get a warning alert that basically tells you, please note that you're getting really close to getting a margin call. You're really close to getting below 40%, you have a band of about 6%. So do you want to bring in more funds? Do you want to bring in more equities? Or would you like to reevaluate your portfolio again to see if there is any you'd like to, reduce your loss? Or if you think that there's still potential in the stocks, then you can bring in more shares or bring in more equities to increase your equity. Remember that whatever contribution you bring into the portfolio is your own equity contribution. It is yours. It increases your equity contribution. And remember that when I was giving the example, I made mention of the fact that you can bring in 10 million and decide that the loan you want to take is 7 million, which means that you have over collateralized. Now, in that portfolio of 17 million, you have 10 million, which is even over 50% in that portfolio. So your equity can be higher than 50%, can be higher than the minimum. However, it shouldn't be lower than 40%. It's at that time you get a margin call. Now, I've made mention of a margin call, but then if you're asking, so what then happens if I get a margin call? Why exactly is this so dreaded? Now, at the time when you get a margin call, you have a 24-hour window to then decide, are you going to be bringing in shares or are you going to be bringing in cash to increase your equity? Because if you do not do that, the system is going to automatically rebalance that portfolio to ensure that your equity is at 40% or above, or at a minimum at 40%. Thank you.
Thank you very much, Abisoye. So the almighty margin call is just a call for balancing the portfolio, so to say. So I'm going to ask Eniola to just give us a bit of, because if an investor is taking interest in this margin lending, they want to know, okay, what's the market doing at the moment? Is it a good time for me to even consider taking up a margin lending? Is it a good time for me to even take a look at my portfolio, considering how the market has been? So Eniola, looking at the year 2021 so far, what was the outlook at the beginning of the year? Where are we now? And what do we project the second half of the year to be, in very concise answer? And please hold your thoughts. Very soon, at about 12:05, we're going to be launching a poll. We would appreciate that our attendees take about 2 minutes. The poll is just going to take about 2 minutes of your time to just attend the poll, as it will help forge the next steps of the conversation, areas that we should focus on. We would appreciate your time on that. So Eniola, over to you. Talk to us about the market. Thank you.
Well, thank you very much. So for the markets, the outlook for the market this year was based a couple of things of the fixed income market. So the equities markets were the driver of the equities market for the fixed income market. So initially we expected that the market would do well in the first half of the year, and then eventually in the second half of the year we expect that people would start to take profits. But the market did not wait till the second half of the year before. I mean, January was great. The market did about 5% in January, which is actually really good for a single month. But towards February and March, the rates in the fixed income market began to get very attractive. And we saw some sort of market rotation. Investors started with the risky assets, that is equities, free case market, better return. So by February, March, the market began to shed the gains recorded in January, and we saw that continue even up until when markets did about 1% in a single week. So we saw that even companies started releasing their results, it wasn't the reaction, the positive reaction was very temporal. It wasn't really the market very strange. So did really well. Say in the US, for instance, investors took a position. Prices were really low at the time, so a good time to bargain on position for those. So it was very temporal, and before you knew it again, they started to take profits on the little gains they had made. They started to take profit of the investment they had made. So right now, we need to understand that the market is not all removed from the realities of the macroeconomic environment. The market is very, very in with what the macroeconomic is doing. So for things to change in the macroeconomic or in the equities market, we need to understand that investors they need to see that the economy is promising, okay. Because what fits into the equities market is the performance of these companies. So these stocks are those stocks. They are backed by businesses. And for investor sentiment to change, for them to begin to take position on these stocks, they need to see that the businesses they are buying into are doing well. The bottom line is attractive enough. They are returning good profits. And for these companies to be able to excel in whatever they are doing, they also need to have favorable environments, favorable business environments. So eventually you realize that the performance of stocks is also tied to the performance of the general macroeconomic environment. So, and we've seen that corporate filings, that is financial result, the release of financial results is really not sufficient to keep the momentum in the market. So as much as we're expecting the first half results will be out by July. So as much as we're expecting that investors want to bargain on because prices are really cheap now, investors might want to bargain on stocks that are fundamentally sound and also really cheap. This is also expected that the reaction will be temporal, going by what we've seen in Q1 and also in full year, after the release of the full year results and also after the release of the first quarter results. The reaction might be temporal. Of course, some, especially banking stocks, would declare dividends, but investors would expect that investors will also take positions on those banking stocks ahead of the announcements of the interim dividends, and also fundamentally sound stocks which are currently trending. So for the rest of it, the outlook is not significantly different from what is happening right now, except something significant, something positive, and also significant changes in the macroeconomic environment. We expect that investors will keep searching for much anywhere in the fixed income market, which is not as risky as, in fact, is risk-free compared to the equity market. If you get attractive returns in fixed income market, of course they will go there. So significant happens in the macroeconomic environment that can steer the performance of business and in turn improve investor sentiment. You would expect that the performance of the market to be the way it is or slightly improved based on bargain hunting activities. Thank you.
Thank you very much, Eniola, for that very deep insight into the market. And we have quite a number of questions in the question and answer room. So I'm trying to bring up one of these questions. Excuse me, please. So a client is asking, can you elaborate more on the risk management framework, taking into consideration the risk of margin lending in the past? So I think this would be relative to the performance of margin lending when the market was in 2008 thereabouts. So I don't know if Abisoye or Eniola, which would want to take up this question. The risk management framework vis-a-vis the previous experiences of investors regarding margin lending.
Okay, so like I mentioned earlier, we ensure that whatever stock we are recommending to clients are stocks that we have done significant analysis on. We've done in-depth analysis on these stocks. So we're not just, and these stocks are different from what we typically send to clients every Monday. We have a stock recommendation list we send to clients every Monday. These stocks are different from what we send to clients every Monday. These are stocks that we've done further analysis on. So we can tell you that even if market volatility is happening right now, these are stocks that are backed by fundamentally sound businesses, right? So we're not just recommending junks, we're not recommending just anything. We've done our analysis on it. And previously, before the market crisis, the SEC used to release it. But that is available right now. So we are not leaving our clients to go on their own to just pick any stock and then hope to God that it works, or hope to God that the market moves favorably. We've done our own analysis, and then we are presenting you with this. Of course, these stocks are not as, because there is a screen, like I mentioned earlier, we've done a lot of screening. So these stocks are limited to about 20 marks or 25. They are not, it's not the entire market. So there is a screen, and we ensure that the stocks we're recommending are fundamental stocks. So, and just like Bisoye mentioned earlier, rather, before a margin call is made, okay, normally they would want your equity position to be about 40%, but we ensure that, like she mentioned earlier, even when it is about 45%, a warning alert is sent. So all these are also risk measures we put in place. Bisoye, if you have any other contribution, I think you can go ahead now.
All right, thank you very much, Eniola. Okay, so I would just like to reiterate some of the things that Eniola has said. Now, before in the market, or if you remember 2007, 2008, now especially at the peak of the crash of the market, now one of the things that happened is, at the time, even when clients were supposed to get a margin call, you had a lot of people or a lot of stockbrokers not selling, hoping that there will be a rebound in the market, which means that there was a lot of sentiment, in the market at the time. Now we have made it automated. You know what? It goes below 40%. Extra equity is not brought in, the system would automatically sell to cover, to cover that position. And that's one of the risk measures that have been put in place. Now, for the SEC as well, they used to have imaginable securities, but that list has not been updated for over 8 years. So now, which is why we ensure that we do detailed analysis to ensure that, our clients are also protected in the decisions that they make regarding margin lending. In fact, we also ensure that we also look at the macroeconomic factors, how exactly is the market faring? We do not want to overexpose, because if we're leaving the interest at a fixed rate, it means that whether or not the market is favorable or not, you're going to be paying that fixed rate. But then we said, let's also make it a floating rate. At the end of the day, the whole essence is to ensure that clients make maximum returns from the market, which is also why we've said, okay, let's also employ a floating rate when it comes to interest as well. Thank you.
Thank you very much, Abisoye and Eniola, for attending to that question. We have quite a number of other questions coming up in the live, in the question and answer room, and my colleagues were attending to them as they come. So we have here an anonymous attendee states, please, can we have a list of all the fundamentally sound stocks you mentioned? So like Eniola already mentioned, every week on Mondays, we send out a list of our weekly stock recommendations. And at the end of every quarter, the list of the marginable securities list is updated, and it is sent out at the end of every quarter. However, if you want more information on this, you have our contact details, which are reflecting on all of our background. You may reach out to us on how precisely or what information precisely you would like for us to provide to you. So at this point, I think at this point, we would want to go on to our live polls. Do we have our live polls ready? Okay, I think our live polls should be coming up on our screens now. Okay, please, we will crave your indulgence to spare like 2 minutes of your time to answer this question so that we can challenge it into a conversation forthwith and the conversation. We have a question here in the question and answer chat room. What is the current minimum rate of the floating rate per annum? Okay, so I think this has been addressed earlier. The current floating rate is 12%. current floating rate is 12% per annum charged on the amounts that you have traded with. So I don't know if that answers your question. If you require more clarification, please indicate as a writer to that. Then another person is asking, Abisoy, I think you take this question. Is this product for retail clients or eligible counterparties? So possibly what this person is trying to know is how does a retail client qualify for margin lending?
Okay, thank you very much, Mariah. Okay, so I would say that saying a retail client can be very relative, because then what type of retail client are we talking about? But then the best thing to judge who exactly can take margin lending is, do you qualify? Do you meet our risk acceptance criteria? And do you meet the minimum requirements to take margin? Once this has been checked, or once you meet this criteria, then you're good to go. You're good to go and take a margin. Thank you.
Okay, thank you very much. So I know one of our attendees has been asking for like a visual representation of our margin lending. So we'll be introducing a short video will be coming up on our screens right away.
Yes, I just paid my children's school fees. Supposed to buy some shares today, but it's school fees season, you know.
But just like school fees, stocks cannot wait. Life's many responsibilities come with its sacrifices, but with a margin lending facility, you don't have to miss out on your investment opportunities. Now you can buy shares even when you are not liquid. All you need to do is have existing shares, managed funds, or cash to be used as collateral. The marginable stocks will be calculated to determine how much you can get to buy new stocks. Remember, there is no investment without risk. The time and stocks wait for no one. Don't imagine what can be. Let the Meristem margin lending help boost your investment portfolio. Terms and conditions apply. Call 0700 Meristem now to get started. Meristem, let's take you further.
Okay, thank you everyone. Welcome back. So now we would want to give some persons opportunity to ask their questions live, as in just raise your hand, we'll unmute you, and we'll allow you to ask your questions. You introduce yourself, and if possible, tell us if you're a client or you're not, then we'll allow you to ask your questions live. Maybe you've been trying to ask that question and maybe you've not been able to get it across. So please, if you would want to ask your questions now, please raise your hand. You can use the raise hand button at the bottom, and we'll unmute you quickly so that I can ask your questions.
Hello, good afternoon. My name is Adeomi.
Your name is what? Sorry, sir.
My name is Adeomi.
Adeomi, okay. You're welcome, Mr. Adeomi.
Hi. I am currently a client of yours. So I want to ask this. So I got your presentation. Well done. So the margin facility, I want you to elaborate a little bit more on that. I have about two questions. I have two questions I'll ask. The facility that you are providing, is it for retail clients or eligible counterparties? And I would want to elaborate a little bit on eligible counterparties. An eligible counterparty will be someone that has investment experience and knowledge. Some retail clients are more or less armchair investors. They do not actively trade. They adopt a buy to hold strategy. So they are investing for dividend. So if you are not an active trader, why take margin? If you are an eligible counterparty and you are someone that actively trades in the market, then you are somewhat of a professional. You understand the use of margin and can appreciate how that leverage can help enhance a portfolio. So I'd like you to do a little bit more elaboration on that, and also link it with the risk profiling that you are doing for those that are actually taking on this sort of risk. Then secondly, margin, is it the margin is going to sit on your balance sheet, right? Because I mean, to you guys, the margin will be captured as a loan. Is it allowable? I mean, you guys can achieve the same thing by having your proprietary trader, trade on the company's books. Why give margin to retail investors who could, well, sometimes lose money? I mean, there's nobody that plays the market that has not lost money before, but the propensity for a retail client that does not have investment experience to lose that money is slightly higher than someone who is an active trader. Thank you.
Okay, thank you so much. Abisoye, would you want to take on that question? Wanyola, would you want to go first? Abisoye, I will suggest you help us.
All right. Thank you very much, George. All right, and thank you, Mr. Adiomi, for the question. Okay, so I would start from the first question. Yes, when we say retail investors, I think that if you even look at the categorization from the NSE point of view, you would have institutional investors and then you would also have retail investors. So retail investors is very relative, if I put it that way. And then you would have investors that have been in the markets for, since the market crashed, even before the market crashed. And then they still fall under retail investors using the NSE's categorization of retail and institutional investors. So we actually give to retail investors. And now some of the risk criteria that we look at your trading history, for example, to see. So for example, if you're a new client that is just coming on board to take margin, we would ask you, do you have experience trading margin? If you do, can you provide the cash statement from the former house that you're coming from? And that's not because we just want to see what your turnover is like. We want to be sure that you understand the market and then you are active in the market. Now, one of the risk measures that Eniola mentioned earlier is that in as much as Meristem is going to also put in risk measures, you as an individual, when you're taking margin lending, you need to understand that you need to also set limits for yourself. So for example, a day trader might take margin and, it seems like, margin lending is best for day traders. But then we also understand our market. We understand how the market operates. And as an investor, I might feel that day trading doesn't suit my investment objectives, for example. And I feel like, okay, you know what, I can hold it for 3 months, I can hold it for 4 months, and I'm sure that it would get there. Or better still, if I'm a technical investor where I basically look at trends and I've seen that the trends, keep happening over the years, then yes, you might buy to keep, even if it takes you a while as against you trading on a daily basis. Thank you.
Okay, thank you so much. I think that helps. So we'd like to take another question from another participant who would want to unmute and ask his or her question. Do we have any other questions like that? Yes, it's like someone is coming up. But while we are waiting for...
Okay, can you hear me?
Okay, yes, now we can hear you.
Hello, okay. All right, my name is Madam Ifunaya. I'm a very satisfied client of MSBL. I want to use this opportunity to thank everyone in MSBL team for their fantastic services so far. Always been there to recommend the best stocks for me to buy and always calling me to tell me when the best time to sell is. I've made a lot of capital gain trading with MSBL. Okay, so my question, since I'm very interested in the margin lending, is this. If I decide, for example, to bring in 100 million and MSBL, that's Meristem Stockbrokers, gives me another 100 million. Okay, so if my equity goes below this 50% to 40, what happens? I've heard so far that the system would sell automatically. How am I sure that I'm not going to be at a loss? I don't fully understand what happens when, because for me to be at below 40% equity, I believe that the stock market has gone down. So how do I ensure that, I do not lose so much? If someone can explain what happens with the loss at that time, that would be great. Thank you.
All right, thank you very much, madam. I'm not sure I got your name. All right, however, when you get a margin call or when your equity contribution goes to below 40%, at that time, you have a 24-hour window. So for example, today is Tuesday. If at the end of closing today, you get a margin call, which is going to be sent to you via email, and then your account officer or your advisor would also reach out to you to let you know that you have a margin call. Now you have the whole of tomorrow to make a decision on whether you want to regularize your account, whether you want to carry out a detachment, or whether you want to bring in funds to increase your equity. And that's because we know that for the stock to have gone below that, it must mean that the stocks that were purchased have lost value. However, we're also saying that if it keeps going below this particular amount, you're going to even lose more value. So at that time, what the system will do is once there's no instruction gotten, the system would automatically sell to regularize that portfolio. And which is one of the risk management measures that we have put in place to say, you know what? Because if that measure is not in place and the value of that portfolio erodes to, let's say, your equity erodes to maybe 10%, 5%, or even erodes finally, it means that you've even lost the entire amount that you have brought into the portfolio, and all that is left is the amount that you have borrowed. And if those risk measures are not in place, then what exactly is the essence of investment? So that's why these measures are put in place to actually protect the investor. So you have a 24-hour window, which gives you that opportunity to make a decision on that portfolio. So now I have a margin call. What exactly is the best decision for me to make as against the system making that decision on your behalf?
All right. Thank you
Hello,
very
good
much.
afternoon. Good afternoon. I'm Baba Femi Thomas. My question is, given the current insecurity and uncertainties that prevail in Nigeria today, how does it affect the market? There's always a risk that the market will tank when insecurity accentuates. Then secondly, how frequently are we supposed to service this margin loan over a period of, let's say, 1 year? How frequently do we service and how do we service it? So 2 questions there. I'm a client of Meristem too. Okay, how frequently do we service the margin loan? How frequently are we
Okay,
servicing?
I'll answer the first one and I'll allow Abisai answer the second one. About the insecurity and if this is the right time to enter the market, there is really no right time or wrong time to enter the equities market. It depends on the investor's personal objective and the investors, like I said, analysis of the market. So Nigeria's security challenges did not get here today. They've always existed and people have invested in the market and they made good returns. Of course, some people have lost money. So this is not new, and there's barely any market that exists without political challenges or economic challenges. So these are all the things that actually even make, these are all the things that make markets, equities markets, say risky, or the investment environment risky, really. Because, and also that when for a case like Nigeria, really, there is really no folding your arms to wait for the security challenges to subside, really. So because you can't tell when. Like these things have always been, and life has gone on, and life will continue to go on, right? So of course, these are things to be worried about. So this is where you now begin to look at where you direct your investment. So if there is a particular industry that is particularly influenced by the current happenings in the market, it would be wise that you diversify your portfolio to ensure that your risk is spread across different industries. So you are not, your investment is not specific to just one industry. So, and also your investment is not just specific to just one instrument. So would also recommend that you spread your investment across industries, you diversify it across instruments. So this is not a case of should I get into the market now or wait till later? There is no right time. That is the answer. The answer is there is no right time. Whether the insecurity challenge exists or like there is no saying when it will end. There is no saying when things will be stable and everywhere will be safe and back to normal. So because really, how do we define normal? How do we? And all these are very relative, and there is barely any market that exists without these challenges as well. So I said all of that to say that there is no right time to get into the market. So it depends on your personal objectives, the kind of returns you want to make, and how positioned you are personally, financially, and as well the amount of knowledge you have to invest in the equities market. Thank you. Bisoyi, I will allow you to answer a second question.
All right, thank you very much, Eniola. All right, so regarding the second question, Oyefele asked if how often do you service it? So I would say that you service the margin loan. I'll say you service the margin loan on a monthly basis. Now the thing is, the interest is accrued on a daily basis. However, it drops in your account or is posted to your account at the end of the month. So the 30th or 31st of every month, the interest is actually posted into the client's account. Now the thing is, you can actually bring in cash to service that loan, or better still, alternatively, what it does is it reduces your equity. So if you don't bring in cash to cover it, it then reduces your equity by posting the debit into your account and increasing the liability that you have. Thank you.
Okay, thank you so much, everyone. I think we have to make progress from here. Thank you everyone that spoke out or that asked their questions. But before you go, Abisoye, I would want to ask you, how risky are margin lending trading in comparison with other asset classes? Considering the asset classes we have available in Meristem, can you do a little comparison?
All right, thank you very much, George. Okay, so margin lending, I wouldn't say that margin lending is an asset class. It's actually a service that is, rendered. And, you can actually retrace that from the question that Mr. Adewumi asked earlier. Now, however, because of the volatility in the markets, margin lending might not be the safest, investment tool. And then it's also one of the best investment tools that you can make. So good or safe to say that you should always ensure that you as an individual have a plan. I don't think anybody goes into the equities market, without having a plan, not to talk of having to borrow funds to then go into the equities market. So it's like two layers of risk amassed in one, but then it's important that you have a plan because that's going to be what guides the decisions that you make when, using margin to purchase equities. Thank you.
Okay, so Abisoye, most of the participants here would like to know, apart from margin lending, what other things do you think, what other products and services do you think we offer in Meristem? So can you just...
All right, thank you very much, George. Okay, so if you're not client for Meristem, Meristem is a financial service conglomerate, and we've been in business for over 16 years. Now we have our stockbroking arm, which is the one that is, which is the subsidiary that is running this webinar, and that's where we can help you buy and sell equities via our Meritrade platform, or then you can reach out to us via contact@meristemng.com, and then you'll be attended to. Now, we also have our wealth and asset management subsidiary as well, where we can help you with your asset management, real estate. We also do treasury, we buy treasury bills for our clients, we help you trade it, we buy bonds for our clients. We have our fixed tip, which is like a fixed deposit. So we do all wealth and asset management under that particular subsidiary. And then we have our capital business, which is Meristem Capital Limited. Now, with our capital business, if should you have a business and then you want to raise capital, we help with capital raising, determining which would be the best way to go about it. Should you raise equity? Should you sell debt? You know, we help you with that. We serve as issuing houses as well under our capital business. Now we have our probate service, which is domiciled under our Meristem registrars and probate services. So for example, if you have a family member that, you know, that is deceased and, you know, has shares, has properties, and you're wondering, I'm not really in the right frame of mind to put these things together. Or better still, I'm currently not in the country and I really need someone to put me through, someone to help me putting it together. Now, our Meristem registrars can help with that. Now we have Meristem trustees as well. So for example, I want to write a will, I want to maybe have a foundation, an endowment fund, I want to plan my estate, for example. Do I want a living trust? I'm still alive, but I think I want to put everything in order, you know, before I leave. You would agree with me that some of the billionaires that died in recent years, their families have been, you know, struggling over properties. And that's where, you know, the trustees comes into play to say, you know what, even before he died was when he actually put these things in place. It wasn't even effective at the time when he died. Some of it started getting effective even while they're still alive. So we help with that as well. And then we have our Meristem Finance, where you can actually take loans, we help with leases. So you can actually contact our Meristem Finance. And should you have any inquiries, I'm sure that you can reach out to us on any of our social media platforms, meristemng.com on Instagram, Meristem Nigeria on Facebook. And then you can send an email to info@meristemng.com or just call us on 0700 Meristem or 0700 637 47836, and we would attend to you promptly.
Okay, thank you so much, Abisoye. I would want to know if Mr. Oyekunle Ajao, I think he was raising his hand some time ago, if he would want to still ask his questions, and also Mr. Omorege Edosa. So if you would still want to ask your question so that we can unmute you and hear from you. Is Mr. Oyekunle still available, and Professor Morege and Mr. Oyekunle?
Hello, good afternoon.
Yes, Mr. Oyekunle, good afternoon, sir.
Good afternoon. Thanks for all the things you have dished out, and the information is highly invaluable. I want to find out two things. Number one, I haven't heard that the interest rate is about 12%, though there's an opportunity for floating interest rate based on situations whenever the situation arises. So what is your management fee? Did I hear you say 2% on the loan? That's number one question. I mean, the management fee on that loan aside the 12%, or is there any other hidden charges? Now, number two question. If I take a loan of 10 Naira and I utilize only 6 Naira, after which the price appreciate, you know, the shares I bought up and I disposed it, I sell it off. Will I be charged on the interest? Yeah, am I going to be charged on the 6 Naira I utilized, or you charge me on the 10 Naira that I took? Thank you.
All right, sir. Thank you very much for the question. I love that question. Okay, so if you collect 10 Naira and utilize 6 Naira, you would only be charged interest on the 6 Naira. In fact, you wouldn't even be charged interest on the 6 Naira for the entire tenure. You would only be charged the 6 Naira on the number of days that you utilize it. That means the day of purchase to the day of settlement for the sale. Those are the days that you'd actually pay the interest for. Now, for the management fee, we have a flat fee of 2%, which is prorated till the 31st of every year. So, for example, if you join, if you take a margin loan, maybe January 1st, you'll be paying an interest from January 1st to the 31st of December. Now, if you're taking the loan, maybe today being the 8th of June, you'd only be paying the management fee to be prorated. The 2% flat fee will be prorated till the 31st of December this year.
All
I'm
right.
not sure if I answered all the questions.
Yes, you answer my question. It means approximately the total loan is about 14% rate. It's not 12%. Indirectly.
It's the interest is 12%. The management fee is 2%.
Okay. All right. Okay. Okay. Understood. All right. Thank you.
All right, sir. And just to reiterate, there are no hidden charges. So you have your interest fee, you have your management fee, and that's it. And then you then have, your transaction charges every time you make a purchase. But apart from that, when you take margin, the only thing that applies to margin is the management fee and the interest that you pay for the amount utilized. And then for the management fee, the amount taken. Thank you.
Thank you, Abisoye. Can we hear from Professor Morige? Professor Morige. Okay, while we are waiting for him to come up, Abisoye, we would like to know how a beginner can participate in margin lending with Meristem. How can a beginner participate in this margin lending?
All right, thank you very much, George. I would say the word a beginner is a very relative word. If you do not have a good understanding of the market, then margin lending is not for you. However, if what you mean by a beginner is if a new client is just coming in, for margin lending, there's a risk acceptance criteria. And then if you're a new client, you need to provide us with transaction history from your former firm that basically shows, your performance over a certain period of time for us to then realize, or for us to determine if you are actually eligible to take margin lending. Yes, if you're eligible to take it.
Okay, thank you so much.
But first things first, all you need to do is make sure that you have all the requirements necessary. So for example, your KYC needs to be up to date, which is your passport photograph, your utility bill not older than 3 months, a government issued ID, and your signature specimen. So once you open the account with Meristem and then you qualify using the risk acceptance criteria, then yes, you're good to go when it comes to taking margin.
Thank you so much. I think Mr. Luke Kayode, I think you've asked your question before. I think he has asked his question before, but if he has another question, please can you quickly unmute Mr. Luke Kayode Thomas?
Yes, I think I asked my question that time. I was the one that asked about the insecurity and
because I know so. I was thinking your hand is still up, so I was feeling maybe you still have another question.
Sorry about that.
Okay, thank you so much. So I think at this time, we've actually come a long way, and we have discussed so much. I will now hand over this session to Mariah, so that Mariah will begin to wind down as we prepare to come to the end of this beautiful webinar. And I believe we have learned so much. We have added so much values to ourselves. And before I hand over to Mariah, I will want to still remind us that knowledge is not power until knowledge is utilized. So that knowledge in action is actually power. So if we learn everything we've learned here today and we're not taking action, we'll still discover that nothing has changed. So the application of knowledge is actually power. So we want to encourage each and every one of us to take this experience today, the knowledge you have acquired here today, to another level by making that call, calling us, signing up for this beautiful service. And I believe you will have so much to gain. And not just this service, if you equally feel that there are some other things like Abisoye has enumerated that Meristem can do for you, probate services, trustee services, wealth management services, stockbroking services, finance services, just our advisory services. We are just one call away or one mail away. Thank you so much. I will then hand over the baton to Morayo. Hi, Morayo.
Thank you very much, Judge. Thank you so much to all our attendees for still being with us on this journey this far, and for all the contributions, the questions asked. Okay, so permits me to, I can see some hands are still raised. I would like for us to just in very, very short period. Mr. Joel Omoni, can you unmute and ask your questions? Please make it very short and simple so we can attend to them quickly. Mr. Joel Omoni. Hello, is Mr. Joel Omoni here? Okay, can we have Edgar Ajakaye? Your hand is raised. I'm calling your name because your hand is raised. Please go ahead to ask a question. Thank you.
Yeah, thank you. Can you hear me? Can you hear me, please?
Yes, please.
Yes, you can, sir.
Yes, please go ahead.
Thank you. Thank you for the webinar. It came at the right time, and thank you for the explanation and the effort made at illustrating the technicalities. My question borders on the risk, with particular interest of the exchange risk, in the sense that we know that the country is going through some form of surreptitiously devaluing the naira. And as a result, stocks that are Nigerian stocks, more or less, maybe affected one way or the other indirectly. So I was thinking, in part of your package of classes of assets, don't you have anything that probably dominated in foreign currency, i.e. USD, so that clients can take advantage of such activity? Because as of now, the devaluation is really affecting some people, depending on how you want to analyze it. That's my question. And thank you for the opportunity.
All right, so at Meristem Wealth Management Limited, we actually have a dollar and pound dominated product. Now, for our dollar denominated product, we have the MD, which is the Meristem Dollar Investment Portfolio, which you can invest in with as little as $2,000. In fact, you can even invest for different tenors as short as 3 months. And you can also buy Euro bonds through Meristem as well, with as little as $20,000. So we have that for the USD denominated products. Now, for euro-denominated products, we have what we call the REIT Arena, which is a real estate-backed portfolio, which is denominated in pounds. So when it comes to pounds-denominated investments, we have that as well, which you can invest with Meristem Wealth Management Limited. And for dollar products, you can also invest with us. Thank you.
Thank you very much, Abisoye, for that. Mr. Edgar Ajakai, I hope we'll be able to attend to your question. We're coming to the end of this conversation, but I do not know if Mr. Joel Omoni will be able to ask his question now. Okay, Mr. Dewumi, your hand is still raised. You asked a question earlier. Do you still have another question?
Yes, I do. Can you
Please
give me an idea?
in a very concise manner, sir.
Yeah. Can you explain what your recovery process is in the event of a default, or what will constitute a default on your margin facility?
All right, thank you very much, Mr. Adeomi. So when it comes to recovery on defaults, now what we've done is we've ensured that the system doesn't even allow a default. Now let's even say that there is that even occurs. Now those are already stated in the agreement with Meristem. So in the case of death, for example, we're going to have to cover. So in the case of a death, for example, the account is automatically closed and regularization done, which are some of the things that are stated in the agreement already. So in the case of default, with the structure that we have on ground, it doesn't even allow for default. And even in the case of should the system, let's even say the system maybe doesn't even work, with the agreement that you have signed, all of that is watertight to ensure that the recovery of shares and the fact that those shares are not on lien and currently domiciled in Meristem also takes care of that. Thank you.
Thank you very much, Adisa, for answering the question. Mr. Adeomi, I hope we're able to provide clarification to that position. We have quite a number. Okay, thank you very much. Mr. Joel Omoni, do you want to go ahead and ask your question now?
Yeah, are you hearing me?
Yes, sir, Daddy, we can hear you, sir.
Yeah, good afternoon.
Good afternoon,
I
sir.
don't want to waste your time. We really appreciate this kind of seminar. It's quite educative. I'm only refreshed about what I know. I'm not too new in what we have been discussing since. But I just want to add here that I'm only making a comment, and I will assure you that we'll continue our sound relationship. That is my comment. I wish you all the best.
Thank you very, very much, sir. We sincerely appreciate your comments, sir, and we look forward to more profitable relationship. So thank you, everybody, for being with us on this conversation. It has been very insightful. We've learned one or two things. We've learned more than what we even thought we knew about margin lending. And in closing this conversation, I'm going to just ask our panelists, Abisoye Oludipe and Eniola Olabode, for their closing remarks in very, very concise words. Abisoye Oludipe, please go first. Your closing remarks.
All right. Thank you very much, everyone, for having us here. And the discussions have actually been very refreshing and one that is very enjoyable. We hope that with this webinar, you will get on board, evaluate your portfolio, look at your stance when it comes to your investment, and see which of the Meristem products will best suit your investment needs. And as you all know, Meristem is your wealth creation partner. So please reach out to us to enable us partner with you to grow your wealth. Thank you.
Thank you very much, Abisoye.
Yeah, so that's what Abisoye has said. I would say that you do not write off yourself and say, oh, this is not fit for me. I think it's best that you ask us questions, you reach out to us via the platforms that Abisoye has mentioned earlier, and we'll answer your questions to know if you are really eligible for it or not. So you might not be able to evaluate all those points that she has mentioned, but if you reach out to us and ask questions, we'll be able to tell you if this is suitable for you or not. So don't just write off yourself, reach out to us.
Thank you very much, Eniola. And once again, there's a question that a client raised, or one of the attendees raised. If an advisor would be attached to you, if an advisor would be assigned to your portfolio. So what we as Meristem, what we have done is that in order for you not to walk alone, we take the journey with you. There's someone who works with you on your portfolio, works on your investment journey. So at every point that you need to make a decision, you need to have a conversation. there is always somebody available that is assigned to you, especially for our margin clients, to walk you through what needs to be done. So at this point, I'm going to call on the Managing Director of Meristem Stockbrokers Limited to finally wrap up this conversation. Saeed Bashir, please, let's have your closing words.
Thank you, Morayo. Thank you, everyone, the guests, the speakers, as well as the moderators, and most sincerely to our esteemed participants, clients who have been with us for almost 2 hours. It's been quite engaging and very thought-provoking, and we quite appreciate your time. You have stayed this long for knowledge sharing session with us. And as we always say in Meristem, you are the reasons for us to be in business. And in truth to our promise, our brand promise is that we are a client-centric organization. We provide up-to-date market information to grow your wealth in good time in an atmosphere of transparency. And as we know very well, what drives market is information. And we owe it a responsibility to you to provide information to you at all times, with a view to growing your portfolio and taking you further. You have come this far. That is what we tell our clients in Meristem. You have come this far. We want to partner with you to take you further. And that is our brand promise. That is what drives us, what motivates us when we work with our clients. We sincerely appreciate your time, valuable time you have spent with us. And I must also mention a few things that have come up during the course of the discussion. Why margin lending? Margin lending isn't a product for everybody in the market. I must reiterate that. My colleagues who have spoken well, they have mentioned that it's actually a product for people who are informed about markets. However, for the fact that somebody is a retail investor, that doesn't mean the retail investor does not understand the market. So what we have done is we have pegged the margin, the threshold you can take margin, even if you are a retail investor with some knowledge of the market, is a minimum of ₦1 million. And for you to have a portfolio of ₦1 million and looking up to leverage another ₦1 million, that means you must have some understanding of the market. And our onboarding process for margin for our clients also takes care of also mitigate some risk in the process, such that when we are signing you on board, you do understand what you are signing up to and you understand the market so well. And our process, to a very large extent, we take seriously the risk management process to ensure that we do not violate the rules of the market, and our clients are also protected. So you are taking margin that also aligns with your risk appetite and your investment philosophy. And in addition to that, I mean, a lot of questions surrounding insecurity in the market and the capital markets, insecurity in the country and the capital market. As we all know, it's part of us. As my colleague mentioned, it's not strange, even though the spate of insecurity now may be something we haven't witnessed before. But, you know, we believe that this one shall also pass. Insecurity would come and go. It is not going to be like this forever. And that's the prayer of everybody. But I must also mention that according to Warren Buffett, the popular investor billionaire in the US, which we always make reference to, given his feats in the investment industry, is that when everybody is greedy, you should be very fearful. And when people are fearful, you should be greedy. And that is a contrarian approach to playing the equities market. There is no, you cannot say this is the best time to play the market and this is the worst time to. Let data, let research guide you. Let it guide your investment decision. Don't take investment decision without your financial advisor that will provide a proper guide to you so that you are taking informed investment decision. That is what we always advise our clients. Once again, we appreciate your time, your wonderful contributions, and your patronage. You are the reasons for us to be in business. You've come this far. Meristem is poised to take you further. Thank you so much for your time. See you next time in our next webinar. Thank you all.
You've reached the stars, now let's see you conquer galaxies. You've gone for gold, let's show you 2 more treasure chests.
Your story doesn't have to end with you. As a matter of fact, it can continue into the next generation.
The only way to move, fish up the way to go.
And the generation after that.
Don't stop.
After all, you've worked hard to get to where you are. Why should your wealth end with you? Let your story continue.
Let's take you far.
Meristem, let's grow wealth for you.